Hello, this is Tom Cloud with this week's Precious Metals Market Update. Today, as I filmed this early on Wednesday morning, August 10th, here, we've seen the dollar start to unravel and erode. We all know it's going to happen. We've talked about it for months, and in some cases years. We saw the dollar go from 126 on the world basket back all the way down to 72 in the year 2000 when this bull market started in gold and silver. We've now seen it go back to about 94, 95. The dollar's down 5% this year, and you would think reading the papers the dollar is this incredible currency that everybody wants, when it's exactly the opposite. Let me say it again. It's exactly the opposite. We're now seeing Japan. I went into great detail on what's going on with Abenomics and the interview with Jerry 2 weeks ago. You can go back and look at that in the webinar. And you're seeing that China and Japan, that own $2.5 trillion of our debt here in the U.S., are setting up to completely exit and sell all that back and dump it in the world market. This is going to happen. There's no question about it. Now that we're seeing Japan take the attitude to print money, drop it from a helicopter like Ben Bernanke. In fact, they've hired him as their consultant. So as this happens, the dollar is going to start to erode. Today alone, it's dropped 60 basis points. 60 basis points already, and we see the dollar down nearly 5% for the year, and yet people still put their money in there. Now, I understand it if you're putting it there for a very short term, but when these interest rates turn through Japan and China during the special drawing rights in the next 30 days, they'll announce their gold holdings. You can see a very big shortage of gold and silver. Over the weekend, we found out that Goldman Sachs and the World Gold Council and others, J.P. Morgan and others, are now setting up another gold exchange in London because of the big demand in gold and silver. But once again, it's paper gold. It's not real gold. You don't have physical possession of it. It's not a counterintuitive situation. You've got to have the physical metal either in your hands or in a bonded warehouse in a segregated account that you own, where you can have the gold and silver if you want it. This is very important. We're in a very quiet time historically in July and August before the fireworks start in the fall. And personally, I'll say this because you want me to tell you what I'm thinking. We're looking at a stock market drop of double digit, over 10% between now and the election. We're looking at a dollar that's going to go down another 2 or 3%. We're looking at the start of liquidations by Japan and China of U.S. treasuries. There's no market for them. The Federal Reserve will have to print money and buy those, which piles our debt up higher. And no matter who becomes president, the debt now at $19.5 trillion, it's over doubled under Obama. And the way things are going now, whether Trump goes in or whether Hillary goes in, you're looking at probably a $30 trillion deficit over the next 4 years, not 19.5. And all this will completely erode the dollar and move to some kind of gold-backed currency, probably in China, Russia, India. They all could have the same one. There could be a couple of different ones. I can't tell you for sure. But the point is now, you have got to be sure you've got silver for barter. If the banking crisis happens, if these other things happen that we think will happen, after you've got your silver, you need to have gold, which is the real money. Always has been, always will be. Gold is money. Paper is a receipt for real money, which is gold and silver, primarily gold. So hopefully it gives you a quick update. We're seeing some huge sales consummated in Europe from major wholesalers in both gold and silver. We see central banks. Every central bank has bought gold except for Canada. That tells you where they're putting their money, because they know eventually, whether it's 6 months or 18 months, gold is going to be money again, and there'll be an adjustment in price that could go 5 to 12,000 per ounce, depending on who you read and who you believe and how much helicopter money gets thrown out by Japan and the U.S. Prior to them going to some kind of go back standard. So hopefully the momentum, the pace will pick up. You'll be hearing more things. If you're looking for gold and silver in an IRA, give us a call. We'll walk you through the steps to have a self-directed precious metals IRA. You can talk to Dan or Kathleen. Dan's been with me 21 years of my 40-year career. Kathleen's been with me the last 5 years since I moved to St. Simon's Island, Georgia. And they can talk to you about it, or I'm available. You can reach us at 800-247-2812. That's 800-247-2812. And we can answer any questions. And if you're still holding rare coins, we recommend you get into bullion coins before this next big move up. And it's already underway. We see gold up 26% this year, stock market up 6%. And if you read the newspaper, you would think just the opposite. And silver's up 45%. It's at $20.30 as I record this. And once it hits 2050, watch out if we can get a couple of days closed above 2050. We're looking at 22 to 24 probably this fall. So get placed where you want to be. Get this metals purchased. Give us a call. And in case you don't remember, we only mark gold up 2.5% and silver 3% above our cost. We pay the shipping and insurance. And when you're ready to liquidate it, we get you the highest wholesale value in the market at no charge. So the only thing we ever make is 2.5% off of gold, 3% off of silver. And there's nobody else out doing this, giving you the value that we're giving to you. So hopefully all this will help you get prepared for the uncertainty that lies ahead. With this week's Precious Metals Market Update, this is Tom Cloud signing out.